Hello, it's Connie, and I'm here with another video for your viewing pleasure, hopefully. I don't know how many people will be interested in this topic, but I wish there were a lot more. It's something that I myself would never have guessed that I would be interested in, and it's just another example of you just never know the surprises that life will bring your way. Um, but we're going to be talking all about investing and what I've learned in just the past few months since I started investing. So, all of this material is just things I've recently learned in no particular order. I was just kind of jotting down notes for the last few weeks in preparation for this video, just every time something would occur to me. So, it won't be really organized that well necessarily, but hopefully, you'll just get the general drift of the overall picture, and I'd be happy to do more videos to answer any questions or as I learn more myself or whatever. Um, Before we get too deeply into it, I just want to tell you all that there has been a recent Convos with Kim that we recorded just a few days ago about the benefits of gossip. Yes, you heard that correctly. So if you want to know more, you'll have to check that out. Um, And so, without further ado, I'm just going to get right into the material because there is a lot of it. So, I'll just do what I can and maybe do more later or whatever. But I think Tesla is going to be, um, without a doubt, in my opinion, one of the biggest, if not the biggest, companies in the world that is going to change a lot about our society in like monumental ways. I just really can't overstate that enough. And of course, it would take a whole lot more than just these few minutes here to explain why I believe that or whatever. But you all should do your own research. And I just want to have to give a shout out to my brother Rory, who has been preaching this for years, and I just finally got on the bandwagon last year for a couple of reasons. One, I had more disposable income than I had before, and I could just kind of see the writing on the wall the more I researched it myself and like realized this is the time, and that has proven to be correct. Which I can get more into that as we progress here about just how crazy things have been just in the last few months, and we really haven't even gotten started yet. Um, and so I did one uh, video about investing already. It's in my Challenges of Adulthood playlist, and I didn't know nearly as much then as I do now, and that was just meant to be a basic overview video anyway. But so if you want to start there and then come back to this one later or after that, because it kind of explains the foundations of um, what it means to invest and some of the misperceptions that people have, at least what I had. Like, I thought if I bought shares and then the stock price went up, I could just take some profits. But that really isn't the way it works. And the kind that I'm into aren't like dividend stocks where they just pay you periodically. It's the kind where you're it's a more long-term investment thing. I'm kind of getting out of order here, though, so I think I'm going to come back to that in my notes. But some of the reasons, just really quick, that I think Tesla is such a great company to invest in um, is because the energy and batteries aspect alone is going to be huge, which is kind of being overlooked now because they have so many bigger irons in the fire. But this year, I believe you'll start to see licensing agreements with other car companies because their self-driving is really improving with this latest version, version 13. And it's hard for people that want to see like what exists capable of, and they're not finding things very easily that it can't do, or that it can't get out of difficult spots. Of course, there are still edge cases to solve, and sometimes there's accidents or whatever. So it's not unsupervised yet. They still demand that you keep your eyes on the screen the entire time just in case, so you can intervene quickly if something goes wrong. And so like there's actually cameras in the vehicle that monitor this and will alert you right away, and beep or whatever if your eyes stray from the screen, because even though it's driving itself, you're still the one in charge at this point. Um, but um, and then of course the data from the drive is used to solve whatever, if anything does go wrong, then they can go into, because every drive is like recorded, and Tesla can potentially go and get that data when they see, oh yeah, there is a intervention here, so we better dig deeper and find out how to solve that. But Tesla employees are now starting to use the unsupervised versions. So far they're the only ones that have it. But so that means the driving has gotten to the point now where they don't even have to look at the screen or whatever. They can do their own, like be on their phones or just whatever, and then the car will alert them if there's something it thinks that they need to be paying attention to. And it's predicted to be better than your average experienced driver within about 3 months. And of course, that like don't totally take that to the bank, because that might not be the exact time frame when you're talking about innovations and disruptive tech of this sort. You can't totally pinpoint everything exactly when, but that's what their target is right now, that within 3 months from the date of this video, which is in January, that the everybody will basically have unsupervised FSD. Well, I mean the people with the latest Tesla hardware and the latest version of FSD, and then they're going to be slowly rolling it out to prior versions as well, and updating them and whatever they need to do to get everybody on board. And then months after that, they predict that it will be like 10 times better than any human, and you just really won't see an accident at all, like it crashing or whatever. I mean, I'm sure there's always going to be one solitary case probably here and there where something weird happens, like maybe it's another driver's fault, or like that just something weird and unexpected happens. But for the most part, that's what we're looking forward to in the very near future. And so it's very exciting. And I think especially for blind people who we don't have our own vehicles, of course. So we're just kind of at the mercy of I'm so glad that things like Uber and Lyft and stuff like that, public transit is available, but we still have to like rely on other people to get us from point A to point B. And it would just be so cool, not to mention it will be a lot faster eventually once it gets all rolled out. Like you won't have to, basically you'll have a car there within just a couple minutes of when you summon one. And you can go wherever, whenever, and for much less expense than like a Uber or Lyft. Like at first when they roll this out, it probably won't be that much less price wise, because they don't want to totally overwhelm the market, because everybody would want to do it and they wouldn't have nearly enough cars to serve the need. So they have to take that into consideration, but eventually the price will just keep dropping and dropping. And the Cybercab, which is the vehicle that is going to do the bulk of the robotaxi. Well, I should explain first that anyone with a Tesla will have the option to put it in the robotaxi program if they want to just earn extra money. But then there's also going to be the Cybercab, which is the vehicle that they are building that is just for the the robotaxi system. And there is called the unboxing method, which means it's not your typical assembly line. There's our stations along the way, where each of the parts is built, and then at the end it's all put together, kind of like a Lego set or whatever. And the reason they're doing it this way is it's being optimized so that a robot will eventually be able to um, build the whole thing without any human in the loop eventually. And their vehicles are known for like the casting of bigger pieces, like molding of and stuff like that, instead of just using so many individual smaller pieces like in the past. And yeah, like Tesla is just known for using first principles from the ground up or whatever, and not worrying about or considering really how things have been done before, but just if I want to accomplish this particular goal, how to go about it. And then not only though is the full self-driving, which that's the big exciting news that will be happening right now, but the next big thing that Tesla is involved in is the robots, which will ultimately be a lot bigger even than this whole full self-driving autonomous vehicle thing. And even now they're making remarkable progress. For people, you have to dig to find this information because it's not like readily available, but if you dig a little bit it is not hard at all to find this stuff. But they have a uh, many degrees of freedom. I can't remember the exact number right now, but almost, if not exactly, the amount of the same movement that a human hand has. So it's pretty much like a human hand now, in the robot that they're building called Optimus, or some people call it Tesla Bot. And it's able to catch a ball, like that's thrown to it, and then in their legs. And they recently released a video where it was learning how to walk in a sloping, uneven terrain without vision. So and it was able to maintain its balance and not fall down. Um, and so, um, but they are saying the prediction is that 5,000 robots will be working in the factories sometime this year, and then next year they plan to build 10 times that many. So there'll be 50,000, and other factories then will be able to start using them as well. And then the year after that, they want to 10x that. So that would be 500,000 robots out in the world just from Tesla. And that's not even counting all of the other humanoid companies, startups, and stuff that you're seeing everywhere now, too. Um, and so, um, so for a lot of these terms I'm going to now get into, I'm going to use Tesla as an example, since that's the company I happen to be the most familiar with, because it's the one I'm invested in. So that'll just help you to like give examples or illustrations of some of these terms. So like the first one I wrote down is beat. Like if there's a beat, that means profits have exceeded expectations for that time. And then there's kind of the opposite word of that, sandbagging, which is where a company will purposely lowball what they think that their um, outcome is going to be. Um, and I think I have more about that written later on here, but there's volume is the term that refers to the number of shares that are traded in a given period. So that's really important to know. Um, and then you have your ROI, which is return on investment, and which is the profit. And of course, this is all like hypothetical. Like if you don't take anything out of your investment, then it's really not real yet. I mean, it's not, you don't really have the money. Well, it's complicated because you kind of do. Like you can look at your Fidelity or whatever you're in and see how much money you have right now, but it doesn't really count until you sell some shares. and then that's when you can then get the profit from, like, if it was $140, let's say, which is about what it was when I first invested in Tesla. It was $140 per share. And so let's say if I bought one share at the back then, like a year ago, now at one point a couple weeks ago it was at $480 per share. So if I had sold a share back then when it was at that big rate, I would have gained that much more money than what I spent to buy the share. So yeah, so like $340 would have been my profit because I would have sold the share for 480 when I bought it for 140. And so that's the kind of thing that happens. Um, and then there's regulatory that they talk about a lot, which means like things that need to be considered externally, like the laws or whatever that a country has. For example, with Tesla, it would be what kind of roadblocks or whatever will they run into or will they need to consider in order to, before they can even put this on the market, because it doesn't really pay to build something if you don't know how it's going to be implemented in the real world. So like that's why they're probably going to start, well, I mean, not probably, they will start in like California and Texas, because like California already has the Waymo vehicles, so their regulatory stuff has already been approved for autonomous vehicles, and they're more used to already seeing them in that neck of the woods or whatever. So um then there's what's called a soft labor market, which isn't good. That means there's fewer jobs and lower wages whenever there's a soft labor market. Um, a tight labor market is the opposite of that. That's when everything is the way they should be. And another term is if the price goes sideways, um, it just means there's small increases and decreases, but there's not really any big changes. Um, and consolidating is kind of another word for that. And then there's valuation, which is when an analyst makes an estimation of the company's intrinsic value, and how much they expect, like what they think the stock market should be right now according to various considerations. And this is when we can get into a whole big controversial discussion, because like many people that know a lot about Tesla thinks that it's very undervalued right now. I mean, it's only a matter of time, but right now there's just so much that isn't really reported in the news, that is going on behind the scenes, and that analysts aren't considering in their valuations of what they all they're looking at is what's happening right now, and like what's totally guaranteed, instead of what they what is going to happen in the future, even though this future is already like underway, like they can see the progress being made on this full self-driving or these robots or whatever, but they still won't put any of that into their valuations, although they are starting to now, so that's good, but still not nearly what they should be. Because then like other people will look at these target prices, and then they'll see the value of the company, and then they'll be more likely to invest themselves, and then that's how the stock price can go up. Um, and sometimes it just seems like these analysts are just chasing the stock instead of like forecasting it and helping it to go the right direction. That like they'll see that it's starting to go up, and then they'll suddenly say, "Oh, I guess our recent valuations say it should be worth this much," and really they should be leading the charge and saying that it should be worth whatever, and then encouraging people that way to buy it or whatever. But it kind of seems like it's the opposite, which is unfortunate. But um so These analysts also, though, have a lot of stocks to keep track of, so they can't really dig deeply into any of them. So that's why a lot of their things are just kind of more surface level, their predictions and whatnot, because they just don't have time since they're studying so many companies that it's harder for them to know everything that's going on behind in a company. And they also, even if they knew like, wow, this is going to go crazy once we see these uh, robots in every day everywhere around us and whatnot, but they still can't go too bonkers with their valuations, or people wouldn't trust them, and then they wouldn't pay their financial advisor or whatever and take his advice if it was too like wild or um, contrary to what they're used to. And so they kind of have to just be, yeah, like just say they can be a little above everybody else, but like not too much. So yeah, it's kind of one of those political things. And then you have CapEx, which is the capital expenditures, which is the money needed for a company to acquire and maintain and upgrade everything that they need to do. And scaling is when something goes wide or it starts to grow in the market, which causes greater awareness of it. Like when these robots go to scale or whatever, you'll start to see them everywhere. You'll start to see these Teslas driving themselves everywhere because it's scaling up and more people are getting them and more are being made and stuff like that. Um, so like you could say Tesla is starting to scale its AI capabilities, which they've said they're an AI company, not a vehicle company. And so people are starting to realize that now. Um, and then um, appreciation is when something increases in value, and of course, depreciation is when it decreases. Um, and a flywheel is when the market finally reaches a point of momentum where continued growth is easier to sustain, and it's not like it's volatile and go up and down and up and down. It's more like steady. um, and vertical is price goes sharply up or down, and so it's not like the sideways where isn't that much movement. And then IPO is initial public offering, and that's when a private company decides to go public and it's for the first time and start selling its shares. Like SpaceX, for example, is private, so people, just your normal uh, investor, couldn't even buy shares in SpaceX if they wanted to because they haven't put out a public offering. And um, only institutional investors like the big guys are able to invest in big corporations and whatnot. Um, and stock mooning means a rapid increase in stock value, like we saw after the presidential election on November 5. We saw the stock really go up. Um, and yeah, like it was crazy. Like it was just kind of after I started, like in April, it would just sometimes there would just be these spurts where it would go up kind of a lot, but then it would just kind of sit there for a while, and it never really got above whatever, like 250 or whatever. But just since November, it has gone up double that almost, and now it's back down again to 400. And it's just funny to observe people's short attention spans. Like just because it went from 480 at one point, which the all-time high, which several years ago was like 415. And so we finally got past the all-time high now, and then well above that. But then now we're like down to 400. It's just funny to see people panicking. They just have such a short-term focus, and they can't even remember that like only 2 months ago we were at 200, and all they can think of is, yeah, but we were at 480 and now we're way down to 400. So you just really have to not let your emotions get in the way and really think more rationally about this, because it is a very volatile stock. And so if that makes you nervous or whatever, it's not something you should invest in. But I also believe that now is the best time to, if you're going to buy it, because now you can actually see, yeah, something is starting to happen, but yet it's not too outlandish. Like if you have any disposable income that you can go ahead and buy some shares without it being so expensive that only the big guys are eventually, if it goes much higher, that's going to make your average person not be able to buy. So the a bull market is when most investors are buying, and like when they say somebody is really bullish about the stock, that means they really think it's great and has a lot of potential. And this can be overall the overall market or a specific stock. But then there's a bear market, which means most people are selling. And then you can also hear about bears. Like if somebody is bearish about the stock, that means they don't think it has much potential. Um, and there can be a bear market when something bad happens with the stock, or something happened in the economy that was like unexpected or whatever. And Then there's whales, which means the big guys, the institutional investors or companies. And then there's your retail investor, which are the individual people that are investing, like me. And dividend stock, I kind of talked about that a little bit. Johnson and Johnson and stuff like that would be examples of that, where there's they just pay their shareholders every now and then according to how the market is doing and how much they're selling or whatever. Um, so with stuff like Tesla, though, the investor decides when they want to buy and sell their shares, and it's extremely risky if you don't know what you're doing, and you're not a long-term investor. Like some people do a lot of day trading, and or like shorter term trading, which my brother does some of that. And I'm always going, you shouldn't do that, but he is experienced by now. And like if you know what you're, if you're just like have learned so much about how everything works and can like read the signs and stuff. But I would never do it because I mean, I don't want to just take that risk with the amount of money I have. And but there again, so a long-term stock though is not for people that want to take profits out early. Like you have to have at least like I would say for Tesla, at least a 5-year horizon where you really don't plan to take much money out at all, because that's how long it's going to take to for things to really start to ramp up in a huge way. Um, so yeah, you just have to have a deep understanding of the company and know it well in order to want to invest in something long term like that. And like have a good idea of their roadmap, like what they expect to do in the future and what they're doing right now and all that. Like I spend several hours a day listening to podcasts about how they're doing and the good things that are happening and the bad things that are happening in the economy and just with Tesla in general. So I feel like I have a pretty good finger on the pulse of um, which helps me to like stay with my convictions or whatever. Or if something bad happened, I would hopefully have a good enough heads up about that. But I mean, that would have to be like a black swan event, like a war suddenly breaks out or another pandemic or something like that, which is not out of the question, but yet it's not at all likely, really. But that's called a black swan event, is when something totally unforeseen happens. Um, And ARK Invest, and it is a finance agency. ARK Invest is a financial um, agency that like invests your money for you or gives you financial advice, and they are specialized in disruptive technologies. Some people also call them the Kathy Wood stocks because she's the founder of the company. And disruptive technologies means like things that's going to really change the industry. The biggest stocks in the country, or the most influential, are called the Magnificent Seven. Um, and they're the highest performing, and they include Google, Nvidia, Apple, and um, Meta, of course, Tesla, Amazon, and Microsoft. So you hear about them a lot in the when you're studying about the stock market. Um, the TAM is the total addressable market, which is the total revenue of a specific market. And vertical integration is what Tesla does very well. When they control different stages of the supply chain themselves instead of relying on other companies are outsourcing a lot of their stuff. So they're great at doing a lot of it as much as they possibly can in house and not depending on other, like they do depend on NVIDIA, for example, for some of their chips and compute and all that. But as far as like letting other people build some of their parts or whatever, you hear about OEMs, like original equipment manufacturer, and as much as possible, they want to do all that themselves instead of um, relying on other people. And then we have FUD, fear, uncertainty, and doubt, and that is when there's negative sentiment, and a lot of times it's not really based on anything substantial or that can be verified. It's just like people are saying, "Oh no, the stock market went down. There must something bad must be about to happen." um, and so hawkish, I don't really know too much about this yet, but it means favoring higher interest rates to control inflation. And then the opposite of that is dovish, which is more favorable to investors. And I'll tell you more about that as I learn more. Window dressing is kind of what was happening at the end of the year, where people were starting to get a clue. Some of these companies, oh, maybe there something really is going to happen next year with Tesla, and I better like buy some so that I can tell my investors that we are invested in them because they're going to start asking us, and so they'll buy stock in something that's going up. Um, just to show their clients that they're like invested in a prosperous company, but a lot of times it's superficial or just cosmetic, um, rather than like fundamental changes. And a lot of times, then like then they'll sell it off quickly again or whatever after the next year begins. Trimming is what ARK Invest does a lot, unfortunately, because that can affect the stock market. But they have policies in place that they can't go over a certain amount in their portfolios. So if Tesla is doing very well, for example, because of these self-imposed rules that they have, they will sell some of their shares then and take profits. Um, but then, of course, that can cause, since they are such a big agency, that can cause the whole Tesla market to fluctuate that day or whatever. But and so then we have um, leaps, which I don't know too much about that either. But it's just another short form of short-term trading. But a lot of people have lost money doing these short-term things. And so since I don't do it myself, I'm not going to say too much about it. But buying the dip means whenever the stock price goes lower, instead of being all sad, you can look at the bright side and say, hey, it's dropped. Maybe this is a good time for me to buy more shares. Um, and so, um, I think that's the main things I wanted to say here. Oh, I should mention that macro is like the entire economy when you consider all of that, because whatever the entire economy does, I mean, that affects everybody. And uh, and technical analysts focus more on statistics and past performance of the market, or what happened in similar circumstances. Um, and then there's fundamentals, which are more based on like, what does the company say that their goals are, and what have they done, and things like that. Um, and when a bubble happens, that is when the stock market goes up higher than it should, because of speculation. Like, if it goes up too high, then that's kind of not good either, because then it can drop, which is kind of like what happened. I think when it went up to 480 recently, that was a little too more higher than it could stand. So then it dropped quite a bit after that again. So like, there wasn't enough data at that time to back up. It's Yeah, so it's just like a short term thing, like when something happens that you can't really understand why exactly. Like right now, why did it suddenly go up? And then it's leads to panic and sudden price drops when people start selling then, because a lot of people decided to take profits then, because they realize it's not going to stay up this high for very long. So then they start selling, and then of course that causes it to go down. So it's important to make sure the current price is like justified or even slightly undervalued, so that it stays more steady. Um, so high liquidity is good. It means that there's many shareholders, and you can buy and sell more without affecting the entire market. So yeah, it's good when the shares are up more like that, because then things don't affect it as much when people buy and sell and all that. Um, and VIX is the measure of expected volatility over the next 30 days, which I haven't heard too much about, but every now and then that term will come into play. Um, and I've talked about sandbagging, which is when they forecast lower than what they actually expect, in order so that they can exceed those expectations later. um, but the target price is the number that an analyst, like I said earlier, the price that they set after studying all their charts and what they expect to happen. And they'll say, like, I think by January 1, the target price, this market will probably be up to this number. And so investors look at this then to help them decide, based on different opinions of different analysts and what they think like the consensus is, and if it makes sense to them, and how much of the price is just based on sentiment, and only on, or how much is based only on what is happening now and not in the future. So that's all things that individual investors have to take into consideration when they so they have to look at the track record of that particular analyst too. Like, is this person bearish or bullish, or do they have a realistic like perspective on this, and do they have a good understanding of the company and all that, and why are they coming to these conclusions? And so yeah, like I've told you before, that Brighter with Herbert is probably the number one person if you really want to learn more about the stock itself. because he interviews a lot of people that are very knowledgeable, and they can tell you, like, if it's going up a lot, this is what's happening in the news right now, or this is what's happening with the company that could explain this jump, or when it goes down, they'll explain that as well, like what they think. And it's just really fun for me now that I'm personally invested in it, because like they'll do, like when they do their earnings calls, they'll be on, like you can tune into the podcast live, and it's almost like a dopamine hit, like going to a ball game or whatever, just to see what's happening and why and all that. And so yeah, I've just really enjoyed this foray that I've made in my life, and just really glad that there's YouTube and all that, because there isn't any other company that really does has like YouTube channels and stuff like this. And I think this is just because I think um, Tesla is unique in a lot of ways in how they do things, and so it's like more interesting to watch it. And they're just into so many things. And I could say a lot more about this, but it's getting long already, much longer than I intended. So I hope you're not too bored and stuck with me to the end. And please like and subscribe, and I will see you in the next video. Bye for now.